Okay, hey everyone. Today we're going to be dispelling some myths with Yieldmax because Yieldmax helps us earn over 900,000 per year in dividends, and we're living the FIRE lifestyle here, which means financially independent, retire early. And we had another critic come out this weekend and discuss how Yieldmax is going to make us all lose money, so to speak. We'll talk more about it in this video. There's a little thing he did on me. I think his channel name is here down below. And please, check out his comments. I think he's supposed to be here in today's video, and he's going to comment and maybe debate me in this live. But if he doesn't make it, then we'll do a part 2. That's why I said it's a part 1. And hopefully we can do another show together because I think this is interesting. We're getting these dividends of over 900,000 per year, and we're outperforming the indexes. We're up about 25%, 24.5%. And the SP is up 8, the Nasdaq's up 10, the Dow's up 5, the Russell's up 6. So we're living financially free out of our brokerage accounts, getting 900,000 in dividends and outperforming the indexes in the process. And you can do this too. Email me for my e-guides at akatodd48@gmail.com or head to my website, unconventionalwealthideas.com. It's linked in the description. We're leading the FIRE movement here at this channel. As I always say, we were the first to do it. Other channels are starting to do what we're doing now, but we're the ones who were here first. No one else was making videos on YouTube when I started. That's why I had to start my own channel. All right, so you can learn more about us all here at my website, and you can, see the About Me page and et cetera, et cetera. So also, by the way, I'm, again, taking away my phone number and Discord for free at the end of the month. Those are free when you buy my e-guides. But I don't have any more time because I gave my number out to everyone, as y'all know. So I've been getting more and more swamped. It's exponential now at this point. So I have to take my number away at the end of the month, and also Discord, okay? Those are free with any bundle purchase, all right? And so just keep that in mind. All right, so I'm here for all my members. I just got off the phone with someone, and, we had a good talk. Unfortunately, this member was all into Ulti, just like a lot of other members. I don't know where this is going around, but the first thing that Kamikaze was saying, let's just say, I don't like to call out names here at this channel, as you know, but he has a pretty big following, so I don't mind. And he used my video, my video in his video. So I think it's fair game to have this debate. All right. And again, I hope he's here. He said he would be here in the comments. And again, the first issue that I had with his video, if you look at it from the very start, and chat, let me know what y'all think about this video, in the chat, okay? And I have 15 points, are quite numerous, but we have to get through them because this is hindering people from living free from 9 to 5. They don't have the confidence to use Yieldmax or Cornerstone or Roundhill, whatever it is. I don't get paid by Yieldmax. I don't have any horse in any race. I just share what works with me, okay? The first thing that this gentleman said was that whoever full ports their portfolio into Ulti and Misty is going to lose. Well, I actually agree with that point. I'm not saying that putting your whole portfolio in Ulti or Misty would have lost you money, because if you look at Ulti, you can see that it's up since inception, 13%. And if you were to look at Misty's performance since inception, you would be up, 267%. I remember it was like 300 or closer to 300 not too long ago. So you would be doing just fine with the 90% dividend in Misty, and I think it's something around like 80% in Ulti. You would be doing 91% in Ulti. You would be doing just fine in these funds. These dividends are so large, they help you pay down your margin debt, which, as you can see at my channel, is around 600,000. And all of the greats that I know have used debt to get ahead. So we have to use debt to live free from 9 to 5. There's no other way to do it, in my opinion, okay? And so I just have to use debt properly. I always, advocate using margin safely. You don't trade stocks on margin. You get dividends that pay back your debt in less than a year in my situation, which, as you know, again, we're outperforming here, twice the amount, more than twice the amount of the indexes. And we're earning these dividends of over 900,000, which actually grow my account regardless of what the market's doing, because as your margin falls, your account value grows, similar to real estate. And you can actually get ahead in a major way with Yieldmax funds, with funds like Ulti and Misty, just from the dividends paying down your margin alone. So I want Kamikaze and others to just be aware of that point. Also understand that you can negotiate your rates down. You can negotiate your rates down. I've negotiated my rates down twice with E-Trade, okay? So I'm not worried about margin rates at all. Now, and even if they were high rates, my dividend yields are still so high, I don't mind the arbitrage profit I get with the high yields versus the margin interest that I'm charged. All right, so again, but I agree with Kamikaze right off the bat, and I'll just say that you can't put your whole portfolio into Ulti or Misty. Again, you would do well long term, but look at these drawdowns you have in Ulti. This is what I was telling all my members over the past month or so. We were making all this money in Ulti right here on this chart, and then we see this decline. But everyone's trashing Ulti and trashing Misty right now, and it's not really fair when the underlying holdings are falling. This is something that's just amateur hour at YouTube, okay? And in any other channel that's mentioning these kinds of points with erosion and looking at a chart like what's been going on with Misty. Well, here's what's been going on with Misty. You see this chart of Misty, how it's been falling, and everyone wants to trash Yieldmax, which again, I'm not a fan of Yieldmax, or, you know, I'm saying, me personally, I love all the Yieldmax people, but I have no horse in this race. It's Misty, you know, is the chart, and I'm looking at the facts here, and then it's MicroStrategy that is the underlying of Misty. And as you can see from top to bottom, MicroStrategy has had a pullback. All right, maybe it didn't get included in the S&P. You know, it's right on the 200-day moving average. It's right below it now. We've talked about this in past videos. It's on the fence again. So that's going to make Ulti, you know, have a certain elevated volatility level because MicroStrategy is in Ulti, and there are a lot of other small caps within Ulti. If you just go look at the Ulti chart, okay, I know this is like a broken record for members who know, but if you go to the holdings of Ulti, you can see here, download all holdings. Just simply go download all holdings from the Yieldmax website. Look at the holdings, okay? Hit open file, and you will see that they have things in there that have been falling recently, like Coinbase, okay? So Coinbase, that's been falling. All right, you have Galaxy, which took a nice little hit recently. You have Hood, which also fell recently. Okay, and those are Bitcoin related, you know, and then you have MicroStrategy, which is Bitcoin related, and we won't even get into the rest of the other holdings. It's the underlying holdings, people, that are causing the wrapper, the ETF of Yieldmax to fall. Okay, it's not Yieldmax. Yes, it's Yieldmax dividends. They cause erosion, but it's more so the holdings underneath Ulti that are causing the Ulti drop. Okay, my Navy, my Frenchie over here, she's needing to go outside. Okay, so that's the first thing. I wouldn't put my whole portfolio into Ulti, but I would be buying Ulti. I'm a fan of Ulti, and it's giving us these dividends, which are paying down my debt, you know, in a reasonable time, and my margin risk goes away. So it just becomes the holdings themselves that are the risk. And Ulti has holdings that are much more volatile, much more high volatility. And when they have pullbacks, so will Ulti, so will Misty. I mean, come on. I mean, everyone knows that. Come on, chat. Just let me know in the chat if you think that's just an absolutely ridiculous point when people are saying, oh my gosh, what's going on with Misty and Ulti? Well, it's pretty simple. The holdings underneath are falling. I mean, very simple. But still, I wouldn't put my whole account into those, and that's where I agree with Kamikaze. I put a good percentage into Ulti and Misty, of course, but we have to keep in mind that we're running margin here. And even if we're not running margin, we're living free from 9 to 5, which means we need our equity to be preserved. So if we're preserving our equity, we need low maintenance names. That's why I park so much of my money in Cornerstone. It doesn't matter. We could talk about Cornerstone. We could talk about other funds like SPYI, QQQI, but why mention those when Cornerstone's 30% maintenance, just like those funds, but it has a 20% yield versus those funds, you know, 10 to 15% yield, plus Cornerstone drips down at the NAV. So you get the 20% yield and you get the 19% gain every month on top of that. So now I just refresh it. Now it's 20.36. So we get this gain on top of our dividends every month. Why wouldn't I mention Cornerstone every time? And I don't know why more YouTubers don't talk about Cornerstone, and that's why I, again, started my channel. I know a couple of other channels have mentioned Cornerstone here or there, but they don't use Cornerstone with a complete approach like I do, where you take Cornerstone and you anchor it because it's low maintenance, and then you use the spare equity to invest the rest of your margin with. All right, that's how we're able to invest, get extra dividends on margin without the risk, withdraw out of our account without the risk because we keep our equity high because of the low maintenance. If you need help understanding maintenance, that's in my Volume 3 e-guide. Another point that I saw, okay, that was number one, don't full port into Ulti or Misty. Who's doing that? I don't know. I don't know who's advocating for that. You're going to win probably long-term because dividends cash flow over time. but you're going to see massive drawdowns and you have to buy the dips. Me and my members have been buying dips in these funds. And for me, I've been shielding a lot of the downside. I've also been hedging Ulti with Salty, shielding a lot of the downside. Everyone said I was crazy when I was hedging with Salty because it had a high share price. What is everyone talking about? It's about the underlying holdings. It doesn't matter how high the share price is or how low the share price is. It's about the underlying holdings, okay? And the percentage moves. So even if it's a penny stock, it's still all about the percentage moves, not about the share price moves. That's one of the oldest myths I've seen in the book, okay? People saying that share price, high share price or low share price means I can buy more shares and I can get ahead. It doesn't matter. It's all about percentage moves of the underlying vehicle. Once again, you can't go by aesthetics. You can't look at what the world is perceived as. I know this sounds crazy, but if you go look at a chart of Cornerstone, for example, over here on E-Trade, you see that Cornerstone, well, it's been moving upward, left to right nicely. So we get capital gains with Cornerstone. We get the low maintenance, and we get the drip at NAV, the 20% drip at NAV. Okay, but look at this chart on a 5-year. It kind of goes sideways, but look at it, what it did on Morningstar. It's a 4-star fund, by the way, been around since the 80s, and look, it goes upward, left to right on its chart. So you can't go by how things look, okay, on the outside. Okay, can't judge a book by its cover, as they say. In the Bible, they say you have to have a repentance and change the way you're thinking. You have to be renewed in knowledge daily. Okay, so, and it says, God is principle, truth, and spirit, Book of John. So I'm just following principle. I'm following facts. I'm following the truth. I'm following the returns on Morningstar. And I see the total returns when dividends are factored back in. Whereas at E-Trade, again, you're not going to see that. Same with Yieldmax. Okay, if you go look at a chart of, let's say, MicroStrategy, MSTY, you're going to see MSTY, you're going to see erosion, right? You're going to see it's going sideways to down. But if we go over here to Cornerstone and we duplicate this tab and we go pull up a chart of Misty, okay, without clicking an advertisement, if I can, all right, go here, okay, duplicate this chart of Misty, MSTY, duplicate what we saw in Cornerstone, okay? Let's look at Misty, okay? I never even pull this up on Morningstar because it's not necessary. But look at this chart. It moves upward, left to right, okay? So look at the category, look at the index, look at the price, the blue dots. It's moving upward, left to right, tracking Misty, all right? So it looks like a real chart after you factor back in dividends, of course. I mean, come on. How do investors not know this by now after seeing my channel? All right, so make sure, though, when you're playing Cornerstone, that you play it properly between the highs and lows. If you're trying to buy Cornerstone just because I told you it has a 20% yield and it's 4-star and it moves upward, left to right, which is all great, and it gives you days gains, it usually outperforms on a down day. That's how we're up on Friday. We actually were in the green on Friday when everyone else was in the red because they're in Misty, they're in Ulti. We're actually in things that are up, okay, and helping shield volatility in our account. But you have to play Cornerstone properly. Don't just go buy it because I said that. Okay, I don't give any financial advice. Same for Yieldmax. With Cornerstone, you have to play it properly between the rights offerings and the premium thresholds. If you need help playing Cornerstone, this is my Volume 4 e-guide. So if you simply sold here at the highs, you could have taken all your gains here and then bought at the lows. Could we time it exactly at the highs here? Actually, we could, because here we alert you of the Cornerstone rights offering announcement at Discord. All right, we got the alert, the N2 filing before the drop, right when the drop occurred, and so we all sold after hours. Right, most of us who were able to see this alert, and so that's how we made so much money this time around. Again, I've leveled up my account from 15,000 to $1 million because of the triple C's. All right, Cornerstone and the triples. And everyone always asks, what are the triple C's? Cornerstone and the triples. I mean, come on. I keep saying it. They're not listening close enough in my videos. Go look up what triples are, or go see my Volume 7 e-guide. That's how we made all the money back after the lows in the Trump tariff wars. And in 2022, I've been investing for 20 years. But how I made all my money back from Corona were the triple C's: margin, Cornerstone, and my leverage vehicles that I use very strategically so they don't hurt me in a down market. Again, that's all in Volume 7. Another point that I saw was, when I got to point number 3, okay, I already gave you point number 1. Don't full port your portfolio into Ulti and Misty and all that, okay? But also, point number 2, he said that he doesn't like synthetic calls, right? Synthetic. And, synthetic is good for me. That means naked, all right? And naked is good for me because I get more flexibility. And if Yieldmax is using European options or something like that, which I think they are, but I don't even want to look into the specifics of Yieldmax because I never like to be wrong or right in my videos. I just know that many use European style options, which are flexible, and it gives you more control, obviously. And when you're naked and you get to sell synthetic, I don't look at that as synthetic. I look at it as naked. All these right here then are synthetic. Call me a synthetic investor because I love synthetics. That means that they're paying down my margin significantly because I don't have to own the shares. These sold puts that I have here pay down my margin by $50,000 to $100,000. They give me days gains, minimal, which is what I want to control my volatility, but they gave me $50,000 to $100,000 in premiums, and they lowered my risk more than any other put options, more than Yieldmax does, because the way I sell puts is the most advantageous, and that's all in volume 6 if you need help selling puts like I do. And then I got to point number 3 about Mumu. He has a Mumu deal. And I just thought to myself, man, he mentioned Mumu like 2 or 3 times. I've already mentioned my e-guides, like, 2 or 3 volumes of my e-guides, and everyone hates on me for mentioning my e-guides when they're probably the best service that anyone's ever offered in the history of mankind, in my opinion. I have this argument with Christina all the time. It's like, I think it's better than the Model T, because even that Model T invention was great. It gave everyone freedom, from a car. You get a car, you're driving, you have freedom, you can get to your loved ones when you need to. But it still costs money. You still had to have money and until it was widely available to the masses. And so I'm teaching everyone how to make money and get cash flow and live free from 9 to 5. I've never seen anyone offer such a service in such a way that I do, with the equity, with the margin, with the dividends, with the sold puts like I'm mentioning here. And meanwhile, everyone else that I know of on YouTube is mentioning something like a Mumu or something like that plenty of times, and I don't see them getting the same hate for it. But anyway, I'm offering a real service, a real value. Okay, I can't think of anything more valuable than the information that I've shared in these YouTube videos. Put it this way, I've never bought a service that was any more valuable except something that was health related, okay, in the medical field, all right, because obviously health is wealth. Okay, so I just saw that point number 3, Mumu. He talked about that a lot. Okay, we already talked about point number 1. Okay, which was who's full porting into Ulti and Misty? No one that follows me closely, all right? Those are people following other YouTube channels, which those aren't real investors. They don't have real experience. They haven't really done anything in the market. They don't have their own portfolio. They're not really showing their portfolio and making moves on the fly in market crashes like I was, outperforming during those crashes. Okay, each of the 3 years that I've been here on YouTube, look at how we got through the crash in Europe in 2023, okay, as I was traveling with my family through France. Look at how we got through that. I did some short videos on that. I did that all publicly and transparently in front of y'all. Okay, point number 4, all right? It's just important to note that, again, point number 3, what people are selling, they're selling things, but these things aren't offering a total way of life like what I'm selling here. And what I'm selling here is more so my time. I didn't start YouTube with any e-guides. I did it as questions came and my community demanded it. They demanded that I start this Discord chat room. They demanded that I write these other e-guides. They're demanding that I write volume 8 right now on how to manage my portfolio, and which I'm in the process of doing right now. So this has all been a transparent thing. We were here first. Okay, everyone else is trying to do what we're doing. Even some channels, as you know, are cloning me to the word and to the exact word and doing everything that I'm doing. It's really, I told you, like disturbing. Okay, but anyway, just wanted to point that out. Point number 3, Mumu for him. Okay, point number 4, all right? We have 15 of them, and they're like really more than 15. They're quite numerous. Chat, I hope, I'm not going off, too long on any one point. I hope you're enjoying this. I can't wait to see your chat, and I can't wait to have this debate. I hope Kamikaze shows up, okay? And if he doesn't, please go show up on his, in his comments, say, hey, Todd's here. He's ready to debate you. We're here, okay? Where are you at, okay? All right, number 4, at 7 minutes and 30 seconds in his video, he said that he rolls for losses. Okay, Yieldmax will roll for losses. But then if you factor back in dividends, those losses aren't the same. So they'll roll the options and they'll take losses, but then you're getting the premium in exchange for that. So I don't even understand that argument. Okay, rolling for losses, yes, you're getting losses on the chart, but you factor back in dividends like I showed you on the Morningstar chart, and you have a different outcome. Okay, number 5, when Palantir falls, yes, so will PLTY, okay? And your upside is capped as well with these covered call funds, but that's the point of options funds, okay? They give you options in exchange for the upside appreciation, which gives you cash now to pay your bills now, and they also help protect you some in a down market because usually they fall less in a down market after you factor back in dividends, okay? And even Kamikaze himself was a fan of this. He said, to this point, okay, number 6, so let's go to number 7. He said that, Misty, for example, fell less than MicroStrategy. MicroStrategy was down 50, Misty was down 41%. So what is even his argument against these funds. He was saying, well, my argument is no one ever talks about that. I talk about it all the time. I talk about how dividends lower your cost basis, and the margin that we use actually accelerates your gains, which lowers your cost basis quicker, which I'm getting a phone call in the middle of this live. And everyone should be watching, even the member here who's calling. Okay, and everything's going fine on the live, right? Okay, so yes, Misty was MicroStrategy was down 50, but Misty was down 41, and he even said that was a good thing, but we don't ever talk about that. Jay mentions that himself. I've heard him say it many times. That the stock. And I've heard my members say it that many times. Put it that way. I don't know if they're hearing it from Jay or what, but they listen to other YouTube channels. Perhaps, I don't know. Maybe they're looking at their own portfolio, which is good, and they're tuning out all the noise. And they said that the stock falls less than the underlying. Okay, Misty falls less than MicroStrategy after dividends are factored back in. So, and then the upside is capped, but that's okay. We just want exposure to the asset class. We just want surefire money. We just want income to pay our bills, okay? And we want some performance. But what he's not understanding is we want to be tied to these growth themes that stocks are usually a risk with, okay? So especially when you're using margin, you don't want to trade stocks, as I said. But when we're buying Palantir and Tesla and these things, these are stocks that, yes, they move down with the stocks, but then when you factor back in dividends, they move down less than stocks, even as Kamikaze points out. But these stocks eventually cash flows over time. So if the stocks go to zero, our dividend, which they would never go to zero, by the way, it's, you would be a penny stock. Well, our dividends just keep coming in as long as the volatility is there. And every stock has volatility to some degree or another. So eventually, if you hold long enough, you will cash flow. You're just going to keep getting cash flow in theory over time with any dividend paying fund. So, what could be the problem with a Palantir, or a Tesla, which is falling less, a PLTY or a Tesla, which is falling less than the underlying. And then on the upside, we're not getting that same upside appreciation, maybe plus or minus 10 or 30% even, as he pointed out in some examples. Like some examples, the stock was up 30 and the underlying, the wrapper, Misty, let's say, or one of the funds he mentioned, I think it was Palantir, was up 30. PLTY, up 30. PLTY was up and PLTR was up 30% more than PLTY, okay? And I'm willing to live with that, okay? If I'm sacrificing some upside, you could have been better off in the stock yourself, he says. But that's a complete misnomer, because in order to make any money in your account, which we're up $11,000 today, or 0.44%, which as you can see above is blowing away the S&P and the Dow. But on a down day, we lost less than the S&P and the Dow. Well, in order to make money, you have to put all your money behind something. You have to compound. Okay? And if you don't compound your gains and put all your money behind something like I do with Cornerstone, because it's safe, because it's the index, because it's low maintenance, because it preserves your equity, because it actually gives you compounded returns if you play it properly between the rights offerings, and you can really level up between those occasions. And same for the S&P itself. And, let's say, a VU even. Okay, these actually move up, okay? Move upward, left to right, and they compound gains over time. That's how you make money. Okay, but I don't like VU and Schwab D and all those because they don't pay you enough in a downturn. That's why Cornerstone is right in the sweet spot. But you have to put all your money in something to matter. That's how you make any money. So if you're to spread it into Palantir, if you're to put all your money in Palantir stock, well then that's a terrible way to invest. You have to stay diversified. Come on, this is all, he's cherry picking points. All these credits are cherry picking points like, oh, Tesla sucks. Well, when Tesla came out, Tesla was down in a downtrend. So y'all are cherry picking all of your points, just looking at a chart, and it's total amateur hour. You have to put all your money in something to matter. Look at how we got to almost $2 million in our account. It's because I compounded with the triple C's. Okay, that's how we make real wealth. And then Yieldmax is falling, but we're getting the dividends back, which are paying down the margin debt, which is then growing my account by the equivalent amount, adding to our growth and our performance. And also we're qualifying to banks for loans with these dividends. Okay, that's how we're living free. I can qualify for a house or a car because of these dividends from Yieldmax and Cornerstone. So it's really a complete misnomer to say, hey, if you're in Palantir, it's outperforming PLTY. Yes, that's true. Maybe. I don't know. I haven't even looked at the charts. I don't care to look at the charts. I look at my own performance. He showed you the charts in his video. Let's go by his facts. Well, again, we don't want to put all of our money in Palantir or Tesla or Misty. Who does that? Okay, you don't put all your eggs in one basket. You stay diversified into the indexes, as most experts would agree. Warren Buffett, Jack Bogle, they would all agree. Kevin O'Leary, 90% of traders lose. So you can try a little bit of Palantir. You can have a little bit of Misty. You can have a little bit of all these. Yieldmax gives you the best of all these worlds. So you can have exposure to these growth themes, not have FOMO, which is one of the biggest problems investors face is FOMO. You don't have FOMO. And then you can still have, growth with these stocks. I mean, Palantir was up huge for us. PLTY was actually up huge for us recently. We're still getting gains in these stocks. We're just not getting perhaps as much as with the underlying itself, but go look at PLTY after the recent run up. It's up to you to take advantage of this as a trader. Look from here, from 66 to 80 approximately, okay, around 80, 75. From 65 to 85, you had a 10-point gain plus a huge yield, this 88% yield or whatever it is at the time. So it's up to you to trade that if you want, but I don't like to trade. Traders lose 90% of the time. I like to hold on to Palantir, PLTY. All of my members know I trim Palantir on the rips and I buy the dips and I just build a position out for the long term, just like we would with any stock, but we can't put it all in one stock, so you have to spread it with small amounts between all the stocks with Yieldmax. That's at least how I do it. That way, if one stock falls, you don't get hurt because, you're falling by the amount of a small amount of a stock. Stocks fall by much bigger amounts in the indexes, so you have to stay small in them. And you never know if you're going to win long-term in a stock. 90% lose. So why put all your money in a stock? You can't. So you have to put it all in the indexes, which is Cornerstone, because Cornerstone's the best index play. I mean, come on, all my members will attest to that. It gives you the same gains as everything else, but you get the rights offering opportunity and the drip at NAV. And we have an Australian channel at Discord, and one of my members said that he got the drip at NAV for Australia, so I want y'all to keep that in mind. All my Aussie investors, he's still working on that, but with Schwab, he was able to get that drip as well. So potentially look into that. And I don't mean to say your name. I don't want to say. I'm not saying his name, but I didn't mean to spill the news before it was official. But I just wanted to give y'all some hope. Okay, Canadian investors, you also don't need, as you see here. We have a Canadian channel here at Discord. You don't need the special drip at NAV for Cornerstone to outperform. You just need the rights offering, though. It's great that the Aussies got it, but you just need the rights offering, the capital gains, and the dividends. Those three are enough to blow away the other funds, because when you reload after the rights offering, you can reload 2, 3, 4, 5 times the amount. And that's another thing about Palantir. Okay, we buy the dips, we trim the rips, but we could reload as much as we want to on the lows and really outperform, because then you're getting gains back on the way back up with the compounded dividends with Palantir. So you could potentially outperform PLTR with PLTY if you play it properly on the dips, but then it would require more capital. And if you do that, you need to have more capital for all your positions, because you can't, lose track of your positions. That's why we're so equal weight in my portfolio. If you follow my portfolio, it's there at any time. You can go to YouTube, follow my portfolio anytime right here under the memberships. So all my members know how equal weight I keep everything. And because we can't have it all, okay? We can't have it all, but we can have a little bit of everything, all right? So, it's like that team, that Sandlot, analogy I always give my family, okay? You can have the Babe Ruth ball, or you could have that team ball with all the other names. Babe Ruth being Ulti or Misty, that's great, but, that thing could fail you in a downturn. You could lose that thing. Who knows? Misty, the CEO could die from a stroke or something one day. Who wants to wish such things upon anyone? Nobody, but you never know what could happen. So you have to stay spread into the names that are, all diversified. Gosh, we still have so many other points to get to. I mean, haven't I already kind of put this argument to rest, dispelled so many myths? Okay, let's just see if anyone's in here, anyone, I'm looking for Kamikaze, RIP Kamikaze, I guess his name speaks for itself. Someone wrote, okay, yeah, that's Wealthmax right there. Hey, Mike. And, I don't want to laugh at him. I'm not laughing at anyone, okay? We saw how, Kamikaze strategy did in World War II. I'm not laughing at anyone. I'm just thinking that maybe there's a better way to approach these, and maybe not just so all in one, all or nothing, like he did in his video, just slamming Yieldmax, risking the whole farm basically on this, video, saying that, Yieldmax is failing you like this. I mean, look, we've already dispelled so many myths just now. I think we're halfway through. And, I can go ahead and just say here, number 7, okay, 7 minutes and 39 seconds into the video, he said he was saying that Palantir PLTY fell with Palantir. Okay, PLTY fell with Palantir, and the cadence was more on the upside. PLTY lost to Palantir, which we're okay with. I already described that. But as long as they're tracking, he showed charts of them tracking. Okay, I can't find it in the video. Like I really don't feel like trying to find every point in his video, right? But he was showing a video where two charts were tracking with Palantir, and so as long as they track and they look identical, and the cadences are different, that's all I care about. I just want the same correlation. Okay, the same correlation as. Okay, I guess we can go ahead and get off that. As the underlying itself, okay? And then if we fall less than the underlying on a down day, come on. What's not to like about that? Yeah, we gain less on the upside, but we're gaining more through compounding with Cornerstone and the triple C's, okay? And our margin, of course. So, I mean, gosh, where else can I, what else can I say? That's point number 7. And then I have point number 8 in my phone. Okay, he said the yields will certainly fall. Okay, with MicroStrategy or all these funds going forward, he said yields again will keep falling over time. But then Palantir just raised its yield. Okay, PLTY just raised its dividend the other day, and everyone's like, "Well, how'd that happen?" I remember hearing Jay himself say, "Well, the stock had a good month, so we raised the dividend." It just all goes on volatility. So if he's saying that the dividends will most likely fall. He didn't even say most likely fall. He said they will fall, and that's a really slippery slope to argue from, because again, if volatility rises, then the yields rise. So it's really all a function of what the underlying IV is doing. It's not about what PLTY is doing. And if he thinks it's because PLTY's share price is falling and then the yields will be lower, which a lot of people say, again, it's not about share price. It's about percentage moves of the underlying, okay, and the IV of the underlying. All right, so that's point number 8. Point number 9, Tesla is not down 45%. I wrote, in C website, right? And I think he agreed with that. If you go to the website of Tesla, you see that Tesla's not down 45%. It's after you factor back in yields, it's actually up like 14%. I don't feel like even looking at that either. You can go check out. Let's just duplicate if you don't believe me. Okay, duplicate, and I hope he has a response to this. Because he was saying something like, even though Tesla is it's not down 45% on the chart. Actually, when you go look at total returns, it's up 24%. But what's not fair about his argument with Tesla, same with everyone else, is again, Tesla fell out of the gate because Tesla fell out of the gate when the inception of Tesla occurred. And so if the stock price is falling, once again, then you have to be fair to Yieldmax. Okay, when Tesla came out, Tesla was falling. Okay, so it was a bad time for Tesla, in the sense that it was just following Tesla. Same chart here. Okay, what's everyone talking about? Yes, didn't make it back to the old highs at all, right? Not even close to the old highs. Where is Tesla in relation to the old highs? Okay, it's really not even close. Look, old highs, old highs. So why aren't y'all just looking at the underlying charts here? Okay, so he said something also like, you're not, since NVIDIA inception at the very end of the video, since NVIDIA's inception, you made more in NVIDIA. Well, maybe it had a bad inception date, first of all, so keep that in mind. But second of all, again, we're expecting lower returns with Yieldmax. No one said that these are the same returns as the underlyings. People said that these are options vehicles that you can sell for premiums and get extra income. All right, so we use this extra income to live free from 9 to 5. Here at this channel, I don't know what everyone else is doing. Okay. All right, number 10, the Misty math was wrong, okay, because he was, talking about Misty was falling so hard. Well, again, MicroStrategy was falling hard, so make sure you're factoring in the MicroStrategy drop with Misty. And then he went on to say that Misty actually fell less than MicroStrategy, down 41%, whereas MicroStrategy was down 50%. So I don't even know what he's trying to say there. That sounds like a plus, and I already said that in the beginning of the video. Okay, so... And you said you've yet to see another YouTuber say any of this, okay, about, basically factor back in not only dividends, which you're not doing, but make sure you're understanding that these protect you and act as a hedge. Everyone knows that dividends act as a hedge. That's like the one thing that every dividend investor knows, and they don't say it because that's just common knowledge, okay? Obviously, in down markets, if the market's flat and you have a 10% yielder, and the market's you know, let's say we're down 10% and you have a 10% yielder, well, then theoretically you're flat, and we all know that. Okay, like that's the first thing my dad ever taught me. I hope he's watching it now. All right, so our last point, okay, point number 14. I'm sorry, point number 11. You don't pay taxes on distributions of ROC. Okay, yeah, he said that we have to pay these taxes. Well, ROC, you don't have to pay taxes. And then he said later in the video that you don't have to pay taxes, excuse me. But when you do end up lowering your cost basis to zero, then you're paying taxes. Well, that means that we've doubled. Okay, if your cost basis goes all the way to zero, that's a good problem to have. Excuse me. Okay, I can't wait to get to the debate. All right, and then, you know, I basically said all these points, but in a different order. I'm just trying to make sure I didn't miss anything. Okay, and, you know, I think, yeah, I got all the way down to 15 points, but I probably had 20 or 25 points if you really listen closely. All right, so if you need more help doing what I'm doing, living financially free from 9 to 5, using dividends from Yieldmax, from Cornerstone, using some margin, email me for my e-guides at akintodd48@gmail.com. We're going to go ahead and get into the chat now, and I want to see if anyone's here for this debate. We're up 25% year to date, outperforming the indexes. But I just want to let you know, when you buy my e-guides, any bundle, you get my number and Discord access free for life until the end of the month. Okay, I can't take it anymore. You can learn more about me here at my website, unconventionalwealthideas.com. Okay, and everyone else, I'll talk to you soon. Take care. Bye-bye.